think Fabiana's got French covered. So we want to thank everybody for joining today. We're going to get started. I think we can jump into it. I think it's going to be a great presentation about finances and financials. And we want to thank everybody for joining. We expect a few more people to be jumping in the next 1 to 2 minutes. As usual, we do have interpretation available. So we want to encourage everyone, even you speak English, select the language of your preference. So later on, if somebody speaks French, you'll still understand it. So everybody, reminder, select English or French. Another reminder announcement is we're going to have a couple of polls today. So when we put the poll links into the chat, please take a look at it. It's going to be pretty interesting, specialized poll that Luni developed. And I think that those are the main announcements, questions in the chat box per usual, and we'll keep track. And Luni, if you ever see any questions there, you feel like answering anytime. So I think we're ready to go.
All right, thank you. I see Reiki here, so I'm gonna come off of mute, Reiki. Let's have a little chat to start with.
Hi, Luni.
Well, Amanda finishes up the poll. All right, so why on earth would I, as an entrepreneur, and I am an entrepreneur, why would I want to have financial reports from my company?
How will I know how much to give you if I don't have any idea of finances?
Oh, you're thinking as an investor. Okay, yeah. As an investor, which I am as well, like we, the investors, would like to know how your company is doing. And how it's doing includes, of course, are you making money? How much money are you making? How much money are you bringing in? How much money are you earning in terms of profits? Where are you spending that money? All sorts of things. What else? What as an entrepreneur, if you're running a company, why would you want to have financials even if you don't care about the investors?
Yeah, to actually know if I'm making any money out of this endeavor, or maybe I should quit and go do something else. For example.
Yeah, but I have my bank account, and if it gets bigger, then I'm making money, and if it's getting smaller, then I'm not making money. So why do I want financial? Why do I need the financial reports?
I mean, your bank account is getting bigger, but then if you're just spending it all, you're not making a profit. You won't be able to see it without financials. You need to have a view on the financials so you know how well your company is doing. The numbers matter to match the story.
Yeah. And so this is what we see when we look at a lot of small companies all over the world. It's not an African thing, but what we keep seeing is that people who are running small companies tend to do their financials in their head or in their gut is really where they're doing it, not even in their head. It feels like I'm making money. It feels like sales are going up. It feels like the bank account got bigger, so I must be making money. But you can't actually answer the questions for real, like how much and when, and was this month better than last month, and all these questions. So Amanda, are we ready?
Should be ready, except for I pressed the wrong button really fast. So
okay, so Amanda's going to throw a poll into Menti, and you can share your screen on the results. And
okay,
the first question in the poll is nice and simple. Does your company generate annual audited financial reports? So do you have an accountant who comes and does your books once a year and signs them as an audited version of those results? So there's a Menti link in the chat window.
Yep, right now.
And the answers are really simple. It's oui or no, yes or no. And Amanda's going to share screen so we can see the pretty graph as it fills in. Right?
Yep, it's coming along. So far, we've got 9 people who've answered. Now, I know from past experience that we can get like 90 people to fill this out. So we're going to start the campaign now. So definitely check that chat box, and if I can ask Fabiana to repost it. It looks like I'm able to repost it actually. So
yeah, and the answers are coming in, and it's not the answers I was expecting. So I'm always surprised by financials. I was expecting, out of 24, I was expecting 20 to say yes. We're running like 50-50 here. And the reason that I'm used to seeing audited financials is because the taxing authorities in most countries require audited financials. So you don't have to lie and say yes if the answer is no, but it's good to know that even with those laws, maybe these companies are so small that they're not being taxed, and so they're not doing audited financials. And I'll give it one more minute before I jump to the next question. And the next question, we're going to go one level deeper. So it's nice to get an annual view of your company. And so you got to post the second question to get an answer. And the second question is, does the financial person in your company, do they produce a monthly version of your financial reports? And what do we mean by financial reports? I'm going to show you financial reports in a few minutes. But let's just say even just an income statement. Here's how many revenue, here's how much revenues I earned. Here's the profits at the bottom. Do you get a monthly view of that for your company, whether you do it or your finance person does it or your accountant outside your company does it? Do you get a monthly financial view? And again, we're running 50-50 with 20 answers and 91 people. So come on, join this. And even if you didn't finish the other one, go back in so we can post these answers to the crowd on Mighty Networks and the what are we calling that? The Restore Local site.
Restore Forward.
Restore Forward. All right, sorry, Restore Forward. Too many brands. All right, so why would we want to have a monthly view of the report? That should be pretty obvious from Reiki and I's little discussion. How do you know how the company's doing if you can't see it at least once a month? And how do you know whether it's doing a better job this month than or last month to the month before that if you don't have a monthly view of your company? So let's go to the third question. So for the people who have, this is an if yes. So if you answered yes, then please answer the third question, which is how long after the month ends do you know what your revenues and profits were from the previous month? So whether you have a complete income statement or just those two metrics, how long does it take you? Does it take 1 week? Does it take basically half a month? Does it take it to the end of the month? Or I guess if you have those annual reports but not the monthly reports, then just put in the last answer, which is I only have an annual view. We got the people who are quick came in quickly and filled out 1 week, and now they're being overwhelmed by the people who see this view much later. That's what I'm seeing in the numbers. I love the graphics and how they bounce around. I'm going to let this one go for another minute.
I want to encourage everybody here. We've got 91 people. We've usually had success with polls. 29 out of 90 is not successful. So if you haven't filled it out, please just take the poll. It's in your chat box. You can catch up to the questions. They're very easy. So I just want to remind people, take the poll. Why not?
All right, we're going to go on to question 4. I'm going to go on to question 4. You can go, please fill in question 3 while we're talking about question 4. Question 4, do you think it would be helpful as the CEO or the co-founder, whoever you are on this call, would it be helpful if you had a report on Monday morning that told you what the revenues and the sales and the number of units and the profits were from the previous week? And so most companies meet as a management group Monday morning. Would it be really useful or not to have a report in your hand every Monday to tell you how business was last week? And presumably this report, because you get it every week, would compare it to the previous week, maybe the previous 5 weeks, and maybe the equivalent week from the year before, or even 2 years before and 3 years before, so that you can see how your company's doing. All right, so 30 said yes, 4 say no. I'm really curious on why anyone would say no, but it's your poll, not my poll. So we're getting much quicker answers on this one. And then let's already go to number 5. And number 5 is, which KPIs do you track? So KPIs as in a measurable number that you track, that you actually look at on a regular basis, like every week, every month, every quarter, at least every year. And so you can pick as many as you want. At least that was the idea. How many units did you sell? What was the average price per unit? What are your total revenues, gross revenues, as in total revenues? What are your gross margins? What is the profit margin on that before expenses? Your total expenses, your net income, right? Or your profits, the margins on those profits, accounts receivable, accounts payable, and cash in the bank. And we'll let this run for a little bit longer here, because this could have just been 2 people or 4 people. And one clue in how I'm going to present this is you probably don't look at all these KPIs. If all these were even, I would be questioning the crowd. It's expected that you pick a few of these that are most important to you, and you focus on those, and you look at the other ones every once in a while. But you and your company might be focused on gross margins, and the next person over might be focused on number of units. And somebody else might just, as I said earlier, might just be watching the cash in the bank, and maybe accounts receivable, and that's it. Or maybe you're just focused. Number one thing you care about is the price per unit, because that determines whether you're profitable or not. KPI is key performance indicator. It just means a number. It's a shorthand marketing speak for there's a number I want to measure. And these are just example of financial KPIs. There are KPIs all over your business that you could be measuring. Okay, so we got some numbers in here. Cash is definitely popular. Total expenses people are looking at. That's good. Gross revenue is a little bit more than number of units. Net income about the same as number of units. Things that are not so popular. Net margins. My guess is that a bunch of people on this call don't even know what a net margin is. Hopefully we'll have that solved by the end of the call. Same thing with gross margins is a little bit lower. And accounts receivable, accounts payable, if you don't do accounting, you probably don't know what those terms are. And we should come across those in the upcoming pieces. So with that, thank you for sharing that information. I'm going to share screen now. And we're going to look at some actual financial reports. And so these came from, they're all anonymized, so I don't know which companies they are. And it's been a year, so I really don't remember which companies these are. They're all real. They all came in, all but one, I believe, came in through the TerraFund application process last year. So these are real companies in Africa doing land restoration on top of all that. And we'll start off in French. The majority of you on this call do not speak French, which is why I start with French. And I start here because you should be able to tell what this is without even knowing French. This is entrepreneurship. They call it 101 when it's a basic class, 201 when it's an intermediate class. Here's entrepreneurship 301. Right. So for all of you who want to be big, successful entrepreneurs, if I put this in front of you totally in French, there's a few translations on this page. You should be able to look at it in 20, 30 seconds, say, oh, it's a balance sheet. Even though you can't understand any of the words on the page, it's clearly a balance sheet. And is it telling us it's a good business or a bad business? I don't know. Let's go look down and see. This looks like, I don't know what an immobilization is, and don't tell me, Rakia. Total active immobilized. Okay. It looks like that's last year and this is this year, right? So it's the December 31st of this year and December 31st of the previous year. So this is up. We'll presume up is good. Usually up is good. Total active circulating. Okay, that's up. That should be good. Banks, checks, and other probably assets. So this is probably the money in the bank. That's way up. That's up tenfold. So that's probably good. Total is 25, up from 18. Looks like this company's doing better. And I don't see anything about debt. So I think this is one half of the balance sheet, and the other half is not on here, but hard to tell. Flip into the next page. Oh, look at that. This looks like the other half of the balance sheet. So it looks like, and it's translated at the top. This is the liabilities. And what we want to see when we're looking at a balance sheet, first thing we look at as a investor is how much debt do you have on your books? So how much money's in the bank? That seems to be here. How much debt do you have? And I can tell this is debt because this is the word debt. It's just spelled weird. It's spelled in French instead of English. And oh, that's up too. That's up from 1.5 million whatevers to 7.9 million whatevers. I don't know which currency this is in. And that's, that's growing, which is a concern. And then you want to compare the size of the debt versus the income, but the income doesn't show up on a balance sheet. The income shows up on an income statement. So if I were analyzing this business as an investor, I'll jump there first. I'll then go to the income statement and see how this number compares to income. And I'll see whether or not the income and the profits are big enough to pay for this debt. And we can see if this company's in a cycle of debt, or whether or not this is totally fine and they can afford this, and they can afford more. And so here's the income statements on the next page. Again, we should be able to tell that this is an income statement just by the structure of the statement itself. In this case, I translated a few of the lines just to make it clearer. So here's the total sales. So remember, it was about 8 million units of debt, but sales are 85 million units, 10 times bigger. So that should be an affordable amount of debt. We'll see what the profits are at the bottom. It's bigger than again, we have last year and this year. And so it's grown by a lot. It's grown more than threefold in 1 year, which is a lot of growth. It'd be nice to know which currency this is in so I can see this in dollars so I can understand the scale of the company. But that would come later. And so we have 85 million in sales. We have, looks like total revenues is 85 million. This should be cost of goods in here or expenses. And so we're down to 29 million to run the company. And results of exploitation seems a weird word, but we're down to 23 million of what's probably profits, because this number is the same again. And then maybe this is tax or something else at the bottom to get the very bottom line. But look at that. We have a positive number at the bottom, and it's bigger than that debt. So the bottom line, whether this is the net income or that's the net income, it doesn't really matter. It's way bigger than the debt, so this company can afford that debt. In fact, it should be able to afford to pay back that debt if it could repeat this year again. And that's much bigger than last year. And we can do some ratios and say, well, that's about 10% of this. And so in my head, I can say, oh, look at that, net margins. The profit margins are about 10% last year. And this year, way more than that, right? 10% of 90 would be 9. And it's not 9, it's 23. So the margins went up, right? And I can tell that even though I don't even speak the language. I speak the language of finance. I don't speak the French language, but I can still tell how this company is doing. And I can do this in any language. I've seen these in 5 or 6 different languages because I know what the reports are supposed to look like. I can tell whether or not the company is doing well or not, even without that. So moving on, we'll show a few more of these, and some of these are going to have issues with them. So this one's, well, let's skip the sideways one. It's no, let's not skip the sideways. Let's figure out how to rotate the screen. Rotate. Okay, so here we have an income statement, and the income statement is split by months, which is always nice to see. And we have a year at the end on the rightmost column. And I can make the screen a little bit bigger. to help see it better. It's still really small, but I can just barely see it on my screen. So hopefully you can see it on yours. And we see it's going forward in time, right? March, April, May, June, July, August. Yeah. So we should see the numbers go up as we go to the right because we're going forward in time. Starts with sales. Usually an income statement starts with sales. That is the standard. It's not the best thing to see, but it is the standard. And we see we're going from 633,000 to 14 to 193 to 442. So these numbers are all over the place. Clearly, it's a seasonal business, or the business is doing terrible, one of the two. Either there's two seasons, March, June, and July, and there's just nothing sold here. It'd be nice to know what company this is. And it's fine if we know it's a seasonal business, but if it's not a seasonal business, this company's in trouble because the numbers shrunk down by a lot. Underneath sales is cost of goods or cost of sales. If you've not done the standard, if you've not been trained on the standard before, a big question comes up: what's the difference between cost of sales and expenses? And it's pretty simple. If the expense, so everything in cost of sales is an expense. If the expense is used to sell one more unit of whatever you sell, then it goes up here in cost of sales. And if the expense happens no matter how many units you sell in that month, then it's an expense. So for example, insurance, you have to pay a certain amount for insurance. Doesn't matter if you sell 5 units or 500 units, you're going to get charged, you're going to pay a monthly insurance premium. Same thing with rent. The rent on your building doesn't matter how many you sell. If you want to grow your business and sell 10 times more, you're going to have to find a bigger place to rent, but that rent will then be the same every month. Staff uniforms don't change, right? The telephones don't change. Fuel might change. Sometimes it's just too hard to break out like how much fuel was spent per unit versus how much fuel was just spent. So sometimes it's easier to throw things in expenses. But if you know what the cost is, let's say seedlings, you're growing seedlings and you know how much the seeds cost. Well, the seeds go in cost of sales. If you know how much the pots cost that the seedlings sit in, that goes in cost of sales. If you know what the fertilizer was that went on the seedlings, that goes in cost of sales. And so the nice part about understanding your cost of sales is that you can then compute a gross profit number, what I prefer to call a net revenue number. But a lot of these terms have a lot of names to them. What's often called gross profit is simply your total sales minus your cost of sales. And you can see in some cases in this report, some of these numbers are in parentheses. So what does parentheses mean? Parentheses is another way of showing negative numbers. So in this case, you can see that sales were 14,000 units. Cost of sales was 94,000 units. So this company lost 80,000 units that month. Before they even paid the rent, they were already 80,000 units in the red, as we would say. In other months, they were highly positive. The other thing you should notice on here is there's pennies, there's cents, there's the hundredths of the currency units. And they're not helping us at all read this. They're just they're adding 2 more digits to every number and making it really hard to read. So tell your accountant we don't need the pennies. Like the taxing authorities might want to see the pennies. You as the person running the business, unless the actual number being put in here is less than 1 currency unit or less than 2 currency units, just tell them to just hide all those pennies. They just get in the way. All right. And is this business making money? Well, net profit or net income, another name, is just your net revenues minus your expenses. So we take the total revenues, we subtract the cost of goods, we get a gross profit number. We take out the total expenses, we get a net profit number or a net income number. And if this number is positive, you've made money. If this number is negative, you've lost money. And then you can take this number, you can take the total revenues and divide by this number. No, sorry, the other way around. You can take this number, divide by the total revenues, and it will give you your profit margin. And we'll see that later. And then usually we talk about this number before taxes. That's just the way it works. And so the taxes are something you only pay if you have a profit. And how much you pay depends on your country. When we're trying to compare companies, we don't look at the number after taxes. We look at it before taxes. Here there's no taxes, so that's the same number. Okay, jumping on to the next one. And you can see they're all different. So here is a complicated, this one did not come from the Terra Fund. This is a real company that I've invested in through Africa Eats. And it's a very complicated company. It's complicated because they have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 different things that they sell. Actually 14 with this one, 15, 16 with that one. There's 16 different ways that this company makes money. And I've taken out what the names are. If this was a real statement, it would say, maize, soy, goats, chickens, and so on. Each line would be the actual item. And so what we can see on here is that we have the gross sales, the revenue for each of the products split by month. And this is January through September last year, and then the total through the year on the end. And most of these have dots around them, but not February for some reason, but we can ignore that. And you can see that all the pennies are 0, which means, except for this one, which is 50 cents. It would be nice again if we didn't have all these extra dots, zeros around. But anyway, we'll deal with that. And you can also just see by glancing that product A is important because it's a big number. Product G and J are important because they're big numbers. And things like M and N in transport income are tiny, or at least M and N are so small, it doesn't really matter. We might as well just throw them in other, which they are. But maybe we should just, if we're trying to make this easier to understand, maybe the answer is just throw M and N and L, which is rarely even happens. Just throw them in other. Like there is an other general income here. I don't understand why sometimes this is filled in with some significant numbers and these little numbers are actually pulled out. Anyway, so we can see in this company where the company makes money, which is really useful. Unfortunately, we can't see where they make profits because in the cost of sales section, it doesn't split it out by 16 different products. It just has cost of goods, right? And in this one, it's a little more complicated. It's showing how much did we start with and how much did we end with. So it's also showing us inventories. But basically, it's showing us the cost of all of these combined. And I asked
Et j'avais demandé au CEO de cette entreprise quelle est activité qui est plus rentable et laquelle est le moins, laquelle a une meilleure marge de profit et laquelle a la pire marge de profit. Et le PDG ne pouvait pas donner ce rapport. Il a demandé à son gestionnaire financier de me donner ce rapport. Et avec ce rapport, ils ont demandé de l'argent, mais j'ai dit, je ne sais pas si vous gagnez de l'argent ou pas. Nous pouvons regarder en bas, mais je ne sais pas où. Si le produit A est rentable, même s'il a un chiffre aussi élevé, alors ce serait intéressant de savoir que le produit A est rentable, mais vous ne pouvez pas me le prouver. Et nous avons beaucoup échangé.
Oh, wow, was that hard? And it shouldn't have been. And so I think this is the next piece of the page. So this is the same report, second page. And we can see expenses. So in this case, they're calling them direct expenses, which is, again, fixed expenses. And then there's a whole big section here that they had a bunch of, let's think of it as retail outlets. And here is the results per retail outlet. But I don't know what products they sold at the retail outlets. This is just total revenues per retail outlet, not profits per retail outlet, just total revenues per outlet. And I asked again, great, this is lovely. Where are the expenses for each of these retail outlets so we can see which ones are worth keeping and which ones are worth throwing away? And as you can see from here, they started closing them down, claiming they were not making profits, but having no idea on a financial report whether or not that location was making a profit or not. Somehow they thought they knew, but they were unable to present that to us. And then splitting out the other expenses, I don't understand the breakdown between direct expenses and administration expenses. That was another question. And then finally we get to the bottom. So finally we get to all the expenses. Then maintenance was split out separate for some reason, as were bank charges. We get to the total expenses. And then finally we can see at the bottom whether or not this company had profits. And again, there's another term here, which is earnings. Same thing, net income, net profit, pre-tax earnings, they're all mean the same thing. And in this case, we can see that some months the answer was yes, they made a profit. And some months the answer was no, they lost money. Red in parentheses also means negative. Sometimes we make the negative numbers red just so they pop out. And this was the total at the end. So they made a profit for the year, but they made a profit where 4 months were negative and 5 months were positive. And they were clearly not doing great. And we were asking the questions of, well, what happened these months? And somewhere further up this chart, you should be able to figure out why the expenses were higher than the revenues. It's just really hard to pull it out of this particular chart. It's not the best financial report, but it's headed in the right direction. Okay, moving on, we'll show a few more, and then I'll show you how to make these. So here's back to a true financial from a TerraFund company. Here's an income statement. Here's everything on one page. I'm going to shrink it down just to show you. Here's an income statement and a balance sheet all on one page, which is clearly not going to be enough information to understand the whole business, but at least it's following the standards and providing an okay view. So here we got 2020. Total sales were 29. Again, it's .00, 29,000, probably dollars. If it's dollars, it'd be nice to have a dollar sign. This is something we're used to in America. Our currency has a symbol that we stick in front of it, which is that dollar sign. And so in the US, what we're used to seeing is if a number is a currency, then it has a dollar sign in front of it. And if a number is something else that's not money, it doesn't have a dollar sign in front of it. So I can't tell whether this is dollars or not because it's missing the dollar sign. Could be some other currency. And it's not true in Africa. Most of the currencies don't have symbols. All right, so 29,000, we'll just assume dollars in sales. Cost of goods, not broken out, just cost of goods, one line item, which is, okay, but at least we split it out. 16,000. So we know the gross profits again are 13,000. Again, presuming dollars. We can then do a calculation, which ideally would be sitting here, which would be 13,000 divided by 29,000 and tell us the gross profit margin. There are some other expenses. Those are really small, smaller than the net revenues, which is good. Which means we have a profit before tax. And again, we're not going to ignore the tax line in the line at the bottom. And so we have $6,000 of profits, which is nice. It's good to see profits. What we can't see in this report is that up or down from the previous year. Nor can we see what happened across the year. Is that, again, if you remember the last report, we had a bunch of months and almost half of the months were at losses. Half the months were positive. This is very common to just get this annual view. So we don't know whether or not this was every month was profitable, whether it's seasonal and all the money came in January and nothing happened the rest of the year. Like this is insufficient view for us to like make a decision as either management or investors. And if we scroll down to the balance sheet, and for those of you who haven't been trained, the income statement tells you what the income is. The balance sheet tells you what the company owns and what the company owes. And it's called a balance sheet because the two sides are supposed to balance. And so we're supposed to see a total asset number and total equity and liability number that are the same. And this balance sheet doesn't balance. These numbers are supposed to be the same, which is just a glaring red flag that the accountant did something wrong. Meanwhile, we can ignore that for the moment and just see that there's only $127 of cash in the bank, which is just a big question. Well, where did all the profits go? There was $6,000 of profits. According to this, there's only $127 of cash. It had to go somewhere. Don't know where it went. It didn't go into inventory. Didn't go into land, which is zero. Didn't go into property, which is zero. It's missing. Maybe the entrepreneur just took it, which they're not supposed to do. If they take it, they should be expensive for that. Anyway, and then liabilities or debts. And there's no debts in this company, which is nice. But this number should match this number. So something here is wrong. And in fact, the retained earning line is supposed to be this number from this spreadsheet, and it's not. So maybe what we're seeing here is this is just the December balance sheet, and that's the annual income statement. Don't know, but something screwy on this one. So if you, before you send these reports out to an investor to look at, you should know what they mean. If you don't, ask your accountant to walk you through them. And B, you should make sure that they don't have these kind of errors. Okay, moving on to another. I think this is the same company the next year. Sales are, let's just assume it's the same company. Sales are $54,000. Okay, let's go back. Sales were $29,000. Be really lovely to have this in two columns side by side, but at least we have the 2 pages. This one went up. This went up. This went up, I think, 24 versus 13. Yeah, so almost double. They had some other expenses, blah, blah, blah. And the profits were 12,000 versus 6,000. So the profits were doubled. So that all looks nice. And let's see if the balance sheet got fixed this year. Yes, it did. So now the 2 numbers match. It still says December 31st. We can double check some things. Retained earnings of 23,332, which is again not this number. So I don't know where this is coming from. Maybe this is total ever. Maybe this is this year's and last year's. And still no debts. And now there's a big piece of land that got purchased. So now the question would be, and there's no cash. There's no cash at all. So now the question would be, if I'm talking to this entrepreneur, well, how do you run a company with no cash? How did you afford the land? Because your profits were just enough to pay for it this year. Did you pay off the land this year? And this number is slightly higher than that number. It's like, did you spend all your cash from last year and all your profits from this year on a piece of land? And if so, why? Are you not going to have trouble with no cash in the bank? Right. This is the kind of things that the financial reports can tell us, even though I don't even know what company it is. I don't know what they sell, but a standard financial report can lead to good questions on how the company is being run. All right. A few more. I'm going to zip through the last few here. So here's another company. We're looking at the year ending 2022. And in this case, we have 2 columns side by side, which is a lovely way to do this. A very common way in East Africa to report these things. We have sales, also called revenues. They went up. Cost of sales went up. Gross profits went up. Expenses went up by a lot, like almost none was spent last year. Profits went up a little bit because expenses were tiny this previous year. Is that 22? How is this? So this clearly is a mistake, because this is 4,490. This itself is 4,000, and this is 3,000. So this one has an error in it. Don't get clear pieces. All right. And we don't have a lot of details in here, but another common thing you'll see in a standard audited financial report is notes. And notes just means that the details are later in the report. And I don't know, am I showing them? Yeah. And so here's note 6. So here we had sales is 83,000. see note 6. And here we have the actual breakdown. And in this case, the company has 2 products, product 1, product 2, and here's the total. I don't know why they do this. This is things that annoy me. If it's just 2 lines, why don't you just show me the 2 lines, especially if it's a 2-product company? Just show me the 2 products up here. But anyway, this is the standard way to do it. So they throw it down in the notes, same thing down here, note 7. Again, they're showing cost of goods all bundled together. So I don't know if both of these products make money or just one. Note 8, oh, this is great. Somewhere on the balance sheet is a line item saying cash. Note 8 is just 1 line, and it's not summing up again. Somewhere there's a line item saying note 9. Note 9 just is 1 number as well. It's totally useless to have notes to 1 line. And there's lots and lots of notes in here. Again, this is common. It would be really lovely if the notes were, in fact, just a more detailed version of the report, but that's just not how it's done. Okay. I'm going to do one more on here. So here's the balance sheet of that company. And again, we have year-to-year comparisons, which is lovely. We can see there's cash in the bank. And then I said, had that question of receivables. So there's 2 terms that you should understand. One's called accounts payable and one's accounts receivable. And so there's a line and a balance sheet which has a name receivable in it. In some cases, this is called trade receivable, but it's the same thing. This is sales you've made, but the customer hasn't paid yet. So sometimes you have to give credit to your customers. And so when you have credit to your customers, you have to, we call it booking. You have to book the number somewhere in your financials, but it's not in your revenues because you don't have the money yet. It goes on a line, which is your receivables, which is money you're expecting to have in the future you don't have right now. And so it adds to your assets, but it doesn't add to your cash balance. And then down on liabilities, there's another line that it's right here, which is payables. And that's all the bills you haven't paid yet. So just bills, not loans, but just bills. And so one other metric that's useful to see is accounts receivable growing? Yes, it's doubled. Is accounts payable growing? Yes, it's not doubled. It's growing. It's a lot smaller than receivables, which is good. So you're paying your bills. They're not stacking up. But having receivables double is not necessarily, it's a good thing in that sales are up. It's a bad thing in that your customers are taking longer and longer to pay, maybe. And it's nice to see this broken down by month to see what that looks like. And then the other one on here is Realize Impact is the company that runs the TerraFund loans. And in this case, as somebody who works at Realize Impact, it's nice to see that the loan is listed as a liability, as opposed to being forgotten about. All right. And I'm going to zip down to this one. So this is another Africa Eats company. And we'll share this whole document with you to look at. And there's some notes at the end you can see as well. And if you don't understand any of this, there are tons of free classes online that teach accounting, and there's tons of free classes online that teach business finance. And so if this is going in one ear and out the other, go find those classes and take them in your home language and learn this. This is important in order to run a significant size company. All right, so this is an income statement that was sent to me. Yeah, Rikia?
Yeah, no, just wanted to add that actually. That was a question in the chat for you. The math is difficult, how do you do this? Which is another way to say I'm not a finance guy, how do I get this around? And so if you can maybe repeat that again so people get it, that they have to get this part too.
Yeah, so while you're running a company that's $10,000 a year, $20,000 a year, $100,000 a year, you can probably get away with doing this in your gut. That you just feel like you're selling more stuff. Or you're running a company. What we see often is you're running a company and it's doubling in size every year in terms of revenues. The cash in the bank is staying positive. Everything's feeling great because doubling every year is feeling great. but you don't actually do these kind of financials to this level of detail. And then what you'll discover is at some point, whether that's $200,000 a year or $400,000 a year or $1 million a year, your gut breaks down, that you just can't do it. It's too complicated to do it in your gut. And you'll have a month or a quarter or a whole year that you lose money. And that bank account balance is dwindling and dwindling and dwindling, and you can't figure out why, and you doesn't know. And if only you had started doing your financials back when you were a tiny company at $10,000 a year, $20,000 a year, $50,000 a year. It's very easy to do the accounting then because the business is pretty small. If you set up these processes when you're small, when you get to be a bigger company doing $1 million a year, you won't have that issue of the bank balance dwindling, because as soon as something happens where you start to lose money, it's completely obvious in your financials, and you'll make corrections and continue that growth pattern. Or you'll notice that you can't grow without a certain amount of capital infused into your company. And if you do the financials right, which I'm going to show you how to do in a few minutes, then you'll know how much you have to raise. And you'll know, without this, given how much is in the bank, how much business can I do in the future, versus if I raise some money, how much business can I do in the future? You can start to ask what if questions. So that's a purpose of doing this this kind of exercise of understanding your business as numbers. And so we come to this income statement, which is a real income statement from a real company in Africa Eats. It's a transport company. You can tell that from the revenue titles. I've just taken out the name of the company. And this is what they sent me. So the company got started in April of 2020, which is why January, February, March are blank. You can see that they were earning, and this is in dollars, they earned all of $2,500 in the first month. They earned the total of $134,000 in the first year, right? The first year being 9 months long. Here's the revenues. Here are their expenses. They didn't bother with cost of goods. It's a transport company. Here's the income. They lost money the first month. They made money all the other months. Income before taxes, even after taxes, they made money. And then we have this for every month for first year and second year. And so first year, it was, again, $134,000 total. Second year grew to $511,000. Of course, the expenses went up, the income went up. So first year total, we'll just do, I said we usually don't do post-tax, but it's easier to find. $31,000 of profits. Second year, $146,000 of profits. So that grew by a lot. Revenues grew by fourfold. Profits grew about fourfold. And then there's a key number at the very bottom. And the key number is the profit margin. So the profit margin is simply the net income divided by the total revenues. So $346 divided by $5,710. And you can see there's no pennies. It's so much easier to read. 346 divided by 5,710 is 6%. And then it grew to 13, and then 24, and then 34, and 21. So it bounced around a little bit. And the average for the year, 31,000 divided by 134, was 24% profit margins, which is a really nice profit margin. That basically means that for every $4 that they earned, $1 was profit. In a food and ag company, which is most of the companies on this call, 10% would be a decent profit margin. 12% would be nice. 15 would be great. 24 is, if you have it, 24 is outstanding for a food and ag company. How'd they do on that the next year? It bounced around a little bit as well, but a smaller range. And they ended the year with 29% profit margins. So it went up. This is why I asked at the beginning, is this one of your KPIs? So in this particular company, if we just look at the gross revenues, how much money got paid from customers, and what were the profit margins, those are two great KPIs for this particular business, because it tells us, because it's a profitable business, and it tells us on a monthly basis whether we're above, or if we know that we're aiming for 25, let's say, if the CEO and management team decided that, we did 24 one year, we did 29 the next year, it's 29 because a couple of months were extra good, but 25 is a good target. Then the next year in 2022, at the end of each month, we can see whether or not we hit that target. And if we didn't, we can go back and look at why didn't we hit the target? Why is this 20 instead of 25? And we can find the expense or the drop in revenues and do something about it. And maybe that's what they did, because the next one was 28 and then it grew to 31 and it stayed above 25 until the whole year. And so they wound up with a better profit margin. So I show this one because this was sent to me along with an ask for money in the beginning of 2022. And this is the actual report that was sent to me. And I saw this report, saw the profitability of this company, and I saw how it was basically growing every month. You can just see the numbers go up and up and up. Occasionally a tiny bit of drop, but basically it keeps going up. And this is the first company where they asked me for $150,000. And I said no. And I said, no, can I please give you $200,000? Because this company was asking for a lot less than they earned. And it was making a lot of money. And I wanted to own more of the company. So I offered them more money than they asked. This is the first time I ever offered more money than they asked. And the same thing happened the second time. They asked for money. This was February when we gave them $200,000. And then in August, they asked for more. And we didn't have it. It took until November to get the money. But again, in November, we gave them more than they asked for again. And now they're asking for money again. And I'm scrambling to find them enough, because this company went from $511,000 in 21 to $2.2 million in 22. So it's been growing really well. And this year it'll grow even faster. Okay, so I will share those with you, and I'm going to show you now how to make one of these. So take a deep breath, see if there's anything in the chat window. Can you relate this to the Land Accelerator? Yeah, so the companies in the Land Accelerator are for-profit companies. Like our expectation is that all the companies here are trying to earn a profit, whether they are profitable or not. They should all be incorporated as for-profit companies. And the underlying thesis of the Land Accelerator and TerraFund and Africa Eats and all my work is that the impact that we're trying to have, the restoring land or the hunger and poverty at Africa Eats, the only way we'll actually have enough money to go in and fulfill that impact that we're trying to do is to do it through profits. That we can't do it through philanthropy. There isn't enough philanthropy. We need to invest in companies that make profits, and they can then invest further into the impact. And that way we will actually solve the problems on the continent. That's the underlying thesis. So that only works if we have profitable companies that can keep growing. And so how do you make a profitable company? Well, first and foremost, do you even have a profitable company? You don't know the answer to that question without a financial report. And second, how do you make a bigger profitable company? And you do things like this, literally what I'm about to show you. So everybody I ever work with who doesn't have a degree in finance, when I ask them to build a financial model, they ask me for a template, or they go on the internet and they download a template. And that doesn't work. So if you've been doing that while I've been chatting, or if you've been thinking, oh my God, this is complicated, but I'll just go ask Google for a template, don't. I'm going to show you how this works. I am not going to send you this spreadsheet. So this is being recorded. You can watch this over and over again, but I am purposely not going to share this spreadsheet, because if I do, you're going to use it as a template. And if you use it as a template, you will not understand how it works. I've been teaching this for over a decade. That's just one of those odd realities. So I'm going to show you line by line, which is why they're all grayed out. I'm going to show you what needs to be on this page. And then you are going to go make one of these from scratch by yourself. And if you do it from scratch, you will understand your business a lot better. So it goes like this. This is a honey and cashew company. You have a different company. I don't think we have any honey and cashew companies in here. So you are going to start off with one. If you have 2 products, you're going to do this twice. If you have 3 products, 3 times. If you have 1 product, you only have to do it once. Okay, so we're going to do it for honey to start with. At the top of the spreadsheet, we're going to put how many units did we sell in a given month. We're going to do this per month. So a standard that I'm using in my financials is that a green number is an actual number that happened in history, and a blue number is a number that hasn't happened yet. It's a prediction of what's going to happen in the future. So when you see a green number, it's filled in with an actual because it's June now. And so we're going to fill in January of 2023 with the actual number of units sold. And these are just made up. This is not real numbers from a real company. All right, we're going to start with the number of units sold, not how much revenue did you earn, which is the standard in financial world. We as entrepreneurs are going to start with how many units are sold, because that's a really important number when we're running a company. How many units? What's a unit? Depends on your company. So for honey, it could be kilograms, it could be barrels, it could be jars. For seedlings, it's probably seedlings. For organic fertilizer, it's probably kilograms, maybe it's cubic meters. For cook stoves, it's cook stoves. Unit of cook stove is a cook stove. For charcoal briquettes, maybe it's bags, maybe it's kilograms. You're going to decide what your unit is. What's the average price per unit for the month? Either you know this because you set the price, and therefore the revenue should just be the units times the price. Sometimes you have a lot of different prices. Everybody gets a different price, or the price changes every day, or the price changes every month. And so sometimes you know what your revenues were and you can compute the price. Either way, it's fine. So what we wind up with, if I get rid of this piece here, is one way or another we get revenues. So again, in my spreadsheets, black means the number is a formula. Green means it's an actual number that happened, and blue is a prediction. So in this case, I'm computing the revenues from the units times the price, right? So in the formula bar here, we have E6 times E7. We have this number times this number is that number. Again, sometimes in some of the companies I work with, we know the revenues, we know how much we earned, we compute the price. So in that case, it would be total revenues divided by total units, and that would compute the price. In this case, of course, it's going to come out to the same number. So this would be green and that would be black in that case. Doesn't matter. As long as we know what the units, price, and revenues are, we're going to have that at the top of every section. And then underneath that is the cost of goods. Now, sometimes this can be one line. If you're selling seedlings and your only cost is a seed, fine, just put in one line, cost of goods. But usually there's a few things that go into the cost of goods. There's the seed, the pot, the soil, fertilizer, and onward. Split it out. If it's easy to split it out into those incremental items so that you can see how they change over time. And then sum them up at the end. And again, if you don't know how to use a spreadsheet, which is happens sometimes, you go on Google, go on YouTube, search for teach me how to use a spreadsheet. This one has a formula in it, which is just the sum of these numbers. Right, so sum everything above it. So we have the revenues computed from the units and the price. We have the cost of goods that are actuals. They're just numbers that we pulled out of our records. And from that, we can then compute the net revenues or the operating profit, whatever you want to call it. Doesn't matter. The name doesn't matter, which is simply the total revenues minus the cost of goods gives us the net revenues. Right? 38,000 minus 10,000 is 28,000. That's it. Now we know how much revenues this product earned.
Sorry,
Okay?
I have a question.
Yes.
I wanted to find out on the cost of goods sold. Is it supposed to be per unit when you're computing it, or is it a block figure for everything in total?
Either way is fine. So you can either put in the total. So sometimes what happens I have a cook stove company, another Land Accelerator graduate. That's a cook stove company in Ethiopia. They buy steel each month in order to make the stoves. Sometimes they buy more steel than they need in a given month because they don't know how many stoves they're going to sell in a given month. And so sometimes there's some left over, but there's a line item for how much steel did they buy that month. And that really is the cost of goods. And so, the total cost of goods 1 month might be a little higher because there's a little extra steel purchased. And then another month it'll be lower because there's steel left over from the previous month. But it's a lot easier to calculate how much did I spend on steel because you handed out cash to the steel dealers to buy it versus trying to figure out how much steel went into the number of stoves sold that month. That's a lot harder to compute. Error on the side of easy. Make sure you get these numbers down, do the easy path. So if you know that it's seeds, for instance, you bought a pile of seeds, you know that each seed is 10 cents. You can put down 10 cents and then you can have the number of units times 10 cents be the cost of goods. It's a spreadsheet. It can do the calculation for you. You know how much the pots were. You can put the per pot cost down, multiplied by number of units, whichever one's easier for you to do. Okay.
Just an additional question. What if, for example, there's an asset like in the case of our product, it being biogas, we have storage bags which you buy in bulk, but then it's not necessarily priced with the product itself that you're selling.
If there's something you can't figure out per unit, then just stick it in expenses. And you'll see somewhere else for capital expenses. That for you might be a capital expense. And we'll get to that later. Cost of goods is only the expenses that are per unit. So whatever your unit is, if it's per unit, you put it in your cost of goods. If it's not, put it somewhere else. And again, sometimes I just did this for another Land Accelerator company a few weeks ago, and it was just too hard to compute the cost of goods for the fruit that came out of his plantation. The trees were planted like 3 years ago, so that's not a cost of goods. There really wasn't any cost of picking the fruit because it was the same workforce that does other things other parts of the year, so we just put the workforce down in expenses. We really didn't come up with anything that we could put in cost of goods that was related to picking that specific fruit. So his margins, his profit margins on the fruit was 100% because the cost of goods was 0. Is that true? No, absolutely not. But we capture the expenses elsewhere in the accounting, and so it's true enough. Accounting is not perfect. Accounting is as close to reality as you can get, but it will never match reality. Okay, so underneath, now that we've computed, again, we had the total revenues, the total cost of goods, and therefore the net revenues. That can tell us the profit margin for this product. And I've made it a little more complicated in here. I've said if E8 is 0, if the revenues are 0, don't do anything. Just quote is put in a blank. Otherwise, it's E14, the net revenues divided by the revenues, right? So these random numbers came out to be 74%. And then we can repeat that for the next product. So in this case, it's a honey and cashew business. We didn't sell any cashews, so that's 0. Cost of goods, I just left the 10,000 in there. And so the gross margin is not showing because this number is 0. And we have a net, 10,000 unit dollar loss in this case. Again, I'm not trying to show the numbers here. I'm trying to show how it works out. Because underneath that, what we're going to do is, if you remember, this is kind of like that company with 16 products, except we're splitting out the cost of goods per product. And so since we're iterating this vertically, revenues, cost of goods, net, revenues, cost of goods, net, it's hard to see the total revenues. So we just have a line down here that is the total revenues. And the total revenues, total gross revenues, are just the total of the previous 2 gross revenues. Same thing for the net revenues. They're just the total of the 2 net revenues. And from that, we can compute the total gross profit margin. Okay, so if you have 3 products, you can do this 3 times. If you have 5 products, you can do this 5 times. If you have 1 product, you don't need the total at the bottom here. Okay. Then we have a block that is the operating expenses or the fixed expenses or the expenses. They have lots of names. It doesn't matter. These are everything else that you're going to spend that month, where when you spend it, it's gone for the month. So if you left out anything in your cost of goods because it was too complicated, add it down here. But this is where the salaries go, right? So the salaries are some number. You're going to spend that whole month, no matter how much you sell, and rent and transport and fuel and utilities and anything else. Make as many lines as you need to split out all of your expenses. There's probably one at the bottom for other. Other should be pretty small. If other is about the same size as something else, split it up, tell us what it is. But you're allowed to have an other at the very bottom for the just miscellaneous stuff that doesn't really fit anywhere. And then we're just going to sum that all up. Nice and simple. And at the bottom of that, we're going to wind up with a net income, right? Which was called operating, which was called net profits elsewhere. These are my terms. I like the terms of revenues, expenses, net income. And in this case, it's a loss because these are just random numbers. So we have a loss of 3.7 million something. And we can compute the net margins. The net margins are just the net income divided by the total revenues. And so this is a terrible negative number. We can fix that here just for fun by just making this 1,000,000 units. Now we earn too many, 100,000 units. Okay, so now we have a positive profit margin. This is just from top to bottom here. This is a standard income statement. Revenues, cost of goods, net, expenses, net profits at the bottom. That is what is expected in an income statement, with the only difference being that back up top, we had a number of units and a price, which is not in the standard for income statement. But I'm not done. I have some more lines here. I found to be really useful for entrepreneurs and management to have everything on one page, as opposed to an income statement separate from a cash flow statement, separate from a balance sheet. So I get most of that on one page. And I do that by having another section underneath this called capital expenditures, also shortened to CapEx. These are the expenses you have for equipment and land and everything else that's going to exist past the end of the month. So seedlings are not a fixed expense. Seedlings might be a cost of goods, but often seedlings are a capital expense. They're an investment into the future, because you're going to, let's just say, put 10,000 seedlings in pots. And we're missing comma there. Commas are important to make them readable. We're going to put 10,000 seedlings in 10,000 pots. We're going to grow 10,000 plants that we're going to do something with later. That's an investment. That's inventory. That is part of the value of your company. And we need to put that somewhere. We need to show that we did that on a monthly basis in case you're going to plant seedlings over a course of a few months. And so we put that down in capital expenses, right? Those seedlings will still exist after the month ends. Same thing with the truck. We buy a truck. Truck is still going to exist at the end of the month. It's still going to be useful. And so that's a capital expense. Tools, land, again, anything that's physical and lasting. Could be training as well. You buy some training for your, that training is probably not a fixed expense. It's a capital expense. All right. And then you have a total of that capital expenses. Okay. But we're not done yet. We have one more block to play with. And this block is money in or out of the company from investors or banks. So this normally would show up on the cash flow statement, which I rarely ever look at. The cash flow statements are superfluous for most companies. What we want to know is, did any money, any cash come into this company from grants, from loans? Did you sell some equity? And normally we would stick the payments on the loans up in the fixed expense section. It would just be a finance expense or an interest expense. I'm going to stick it down here. So this is money in and out of the company that had nothing to do with customers. This is, again, this is grants, investments, and then interest and principal payments in and out. And then we can compute a net of this, right? So it looks complicated, but it's just this number plus this number minus that number minus that number. Right, so this is the positive cash in and the negative cash out of the company. And so we get a net capital that flowed in and out of the company. And then at the very bottom of the spreadsheet, we can compute the cash in the bank. So we need to know how much was in the bank at the end of the previous year. So there's just a green number for that. And then we can compute the running total of how much cash should be in the bank at the end of every month. And so that calculation also looks a little complicated, but it's not. It's how much money was in the bank last month, plus whatever profits we made in the company this month, minus whatever CapEx expenditures we spent it on, those seedlings and the trucks and the land and whatnot, plus whatever money came in from investors. Or minus if we spent more money, paying them back than we got in, the net money from investors. So that is just last month. So we got column D, 69 right there, plus your profits, minus your CapEx, plus your net capital gives you a new cash number. And if you've done the calculation right, this should match the balance in the bank at the end of the month. And you're going to do this for January, February, March, April, and May of this year. And ideally, this matches the balance in the bank. And if it doesn't, you go back through everything else on here and you figure out why. And if you do that exercise, you will now have a pretty good, accurate accounting of how your business did from January through May of this year. And it will look something like this. Right, so let's just move those over so you can't see them. And so we're just going to do one column per month. Again, my standard is green as actuals. So I just make the column headers green. I make all the numbers green. I'm just using that particular green in Excel. Doesn't matter which one. This one I find to be dark enough to read. And what you can do once you have this accounting done is you can then see, right? And these are just, again, I'm just copying numbers from column to column. This is not real, but I can see how did the company do month on month? Did the revenues grow? And if the revenues grew, why did the revenues grow? Did they grow because we sold more units or because we raised the price? And I can see if the cost of goods changed. And I can see why, if we've split it up by a couple different numbers here, why did the cost of goods change? And did the margins change? If so, we can look above and figure out why did the margins change. Now we can start to answer the questions as management of this company of why. And we can pick which KPIs we want to go and measure. And again, it depends on the company. Maybe it's just total revenues. Maybe it's units in total revenues. Maybe it's revenues and margins. Maybe it's the difference. Maybe it's one that's not on here. Maybe it's the ratio of honey to cashews. Maybe that's what matters to us the most. And it's a spreadsheet. We can add a row for ratio of our products. And so we can go down here. Ref is just a bad, that's just a copy paste error from taking out some numbers in here. We can see how our expenses are going up or down and why, what's costing more or less. We can see how our net income is doing up or down and why is above it. And then we get things like the capital expenses will have a lot of blanks and zeros. And you can just leave them blank if you didn't spend that month. And this makes it much clearer on it just makes it really clear on where the expenses are, what month did they show up. When you're looking back at this into the past, you'll probably forget, like, oh, was that January or February? Oh, okay, well, I can look it up. We bought the knapsack sprayers back in January. It's sitting there. It's right in your report. Same thing with the money that came in from investors. We have some coloring errors here. Oh, when did we get that loan? Oh, we got the loan in January. When do we owe the loan? Well, we'll see that coming up in the future numbers. And then again, the cash should be accurate to what's actually in the bank. And then what you can do once you have January through May figured out is predict the future. So I said, again, blue is what I used for predicting the future. I'm just using, again, the second to last blue. It's dark enough. You can tell the difference between that and black. What color you use is totally up to you. This is just my standard. And so make columns for June, July, August, September, October, November, and December. And then you can make a column at the end for the whole year. And these are just sums across the 12 columns. So there's no prediction here. This is all formula. So in my system, it's just all black. And then bold is just I don't use any lines. Bold is a total. Not bold is not a total. And so you can then fill in the values you think will happen for June, July, August, September, October, and December. And you have the actuals for a few months sitting to the left to help you pick the right numbers. So this is what you literally do is you go through and you pick some numbers that you think will happen for each month. If you have a seasonal business and you know that nothing's going to happen in, let's just say August, September, October, that's fine. You just make them smaller numbers. Fill in every single cell in the spreadsheet. Make sure that your formulas work, unlike these. Okay. Same thing with your expenses. You knew what your expenses were. You should be able to fill in your future expenses out a few months. And this will then at the very bottom compute how much cash is in the bank. Right? In here, if you have other things you expect to buy that you haven't bought yet, great. Add a few more rows. Add those capital expenses in here in the future. If you expect to raise some money from outside investors, start out, don't put that in yet. But once you have a model that you like, then put in the money from outsiders, and then make a version that spends that money as well. And what you'll find is when you've done this, if you've done it correctly, you will have a plan where the cash in the bank stays positive. If the cash in the bank goes negative, so I can just fix this. Pick a number. No, not even close yet. Great. So here's a great example. So we have, I don't know why this one's missing, but anyway, we have positive amount of cash in the bank, positive amount, and then it goes negative. Well, you can't run a business with a negative cash balance. That should be pretty obvious. You might be able to get an overdraft from your bank for a month or so if you run negative for a month. But here we have a number and it just keeps getting bigger and bigger and bigger. If you do this and your number winds up being negative, then something's wrong with either your financial model or most likely the business you're running. And if it's positive for all the months that you're that are actuals and then starts to go negative in one of the future months, you've made a mistake in your predictions or your business model has a flaw in it. And so there's two ways to fix that. One is to then go back and revise the numbers so that you get a positive number at the end. And the second way to fix that is to assume you'll raise money. And so sometimes what you'll find is a company, you'll want to get your company to be, let's just say, double in size next year. And you'll make a version of this. What's a good thing to do when you're doing these financial models is make a lot of copies. So do the first version, call it version 1. It shouldn't be the final version. Sleep on it, come back to it the next day, revise it again, question everything in the spreadsheet, revise it again, call it version 2. Save it as a new file called version 2. Do that over and over again, and you should take at least 10 or 20 versions before it's actually accurate to what might happen in the future. And then once you have a version 10 or 20 or whatever that you're happy with about predicting the future, you can now make a copy of that and do a version where you have no investment capital coming in. You have the $5,000 grant from this program, but no other money coming in. And then make a separate version for, well, what would happen if I got a loan for, and pick a number. And so you put that number here in, let's just say loans in, and pick a month when you think that might actually happen. Understanding, we'll talk about realities of funding, understanding it takes time to raise money. And then update the numbers after that loan to make all the cash positive, right? To make higher profits, higher sales, higher everything because of the investment capital that came in. And if that winds up being next year, that's fine. Make 12 more columns for 2024. Once you're happy with the version that gets to December of 23, make another version with 12 more columns for 2024 and a total, or 13 more columns with a total for 2024, and predict what's going to happen next year. Probably don't need to go out more than to 2024 unless your company's already at $1 million a year and you're trying to raise a large amount of equity. Then the norm is going to be three future years, this year and 2 more. But for most of the companies on this call, 2023 would be great. 2024 would be better, but not necessarily needed. And a model that has a positive amount of cash in the bank at the end of the year. That is the goal here. Now we'll stop and look at the chat window at this point. I see a lot of bonjours, attendance sheets. Can you add services that bring money to the company? Absolutely. So again, we're showing honey and cashews here, but maybe it's products and services. Maybe you sell organic fertilizer and then you do some training, or you do some consulting, and that's a separate piece. I don't know where they put their no, that got answered. Total capital expenditures will be added to the income or added to the added for the sake of being informed. Total capex winds up being used in the cash, in the formula that computes how much cash is in the bank. And you can put in some other lines in here. You can put in a I've done it before where I do net income and then I'll do a net income line. Net income being net income minus capex. You can call it whatever you want. There's no standard for that piece. And then there could be a net income, which is the net income plus whatever money comes in from capital, from outside capital. In this particular version, I'm just trying to keep it simpler. And so I just go straight from net income to cash in the bank. Can we have a simpler financial model? This is the simpler financial model. This is the minimum amount of information that is needed to understand your business. And no, you can't have a template. If you go and download a template, you'll find they're all way more complicated than this, which is one reason why templates are a bad choice. The reason why I tell people to do this from scratch is if you were to send this to me, and you are welcome to go again, find the LinkedIn link that I shared last week. Somebody sent me their pitch deck already. You can send me a financial model. You need to be able to answer the question. If you send me your financial model and I pull it up and I say, why is the number in cell P43, whatever it is, why is it up or down from previous years? Why is the number P43 what it is? You need to be able to answer that question. You as founder, CEO of the company, or co-founder, COO of the company, you need to be able to answer the question on any cell in the spreadsheet. And I'm not making that up. If you get to the point where you're trying to raise money from a lender or an equity investor, they might just pull up your financial model and ask you a question of any cell, any number that's on here, whether it's a actual number or predicted number. Why did expenses go up or down this month? And you have to be able to answer that question. And you can't answer the question if you ask your financial person to do this for you. And you can't answer that question if you downloaded a template and you didn't build the formulas, and so you don't know why the formula is the way it's built. And especially on the templates where it's pulling from 16 different tabs, and you pull up the formula and it said, here's a cell in this tab multiplied by a cell in that tab, plus this one in the third tab, and so forth. They get really hard to follow. And so I like this version of this model because it's really simple. I know it doesn't look simple if you haven't done it before, but for a financial model, this is really simple, and it's all on one page. There's no separate cash flow statement. There's no separate balance sheet statement. Everything is sitting on one tab. Okay. What's the difference? I'm going to restate this one. What's the difference between financial modeling and accounting? There is really no difference, but there's a set of standards for accounting. So in outside the US, it's called the IFRS standards, International something financial standards. Inside the US, we call them the GAAP standards, GAAP. They're really close, but just like metric and imperial, the US just doesn't follow everyone else. The IFRS standards explains what an income statement is in great detail. It is why if you think back for an hour, it's why there was a note and just one, a note on a line in an income statement, and then just one thing in the note. That is part of the IFRS standards on simplifying the statement and putting notes in. IFRS standard income statement starts with revenues on the first line. That is part of the standard of accounting. What I keep finding, though, is that the standards for accounting are not as useful as they could be for actually running a business, which is why my financial models start with units. Because what I keep seeing as I work with companies is that the revenues go up and down. They generally don't go up every month, right? The reason I invested in that transport company is the revenues went up every month. Normally they go up and down, especially in agriculture companies. They're seasonal. So they go up and down. I want to know, why did they go up and down? I want to know whether the price keeps changing, or I want to know whether or not the units keep changing. One of those two is driving revenues. And in the IFRS standards, it just tells me the revenues. And so one way to look at this is it's telling a story that strangely enough, a spreadsheet can tell a story. And the story is told from the top down. 100 units of honey fell from the sky. We sold them at 300, grew from the ground. It doesn't matter. 100 units of honey showed up. We sold them at 380, again, whatever currency this is per unit. And we earned 38,000 somethings. It cost us this and this and this and this to go have those units show up. And so really, we didn't earn 38,000 units. We only earned 28,000 units. Okay. We then repeated that story again for cashews. And so we had a total of 38,000, let's just call them shillings of revenue. And we spent that on this stuff. Well, we had these people who worked for us. We had rent to pay and whatnot. We had all these expenses to pay. And so the total at the end of the month was that we lost or gained this amount of money. Well, we took that money and we took the money in the bank and we spent it on this and this and this and this and this. And this lovely lender came along and lent us the money to spend some of that money. And at the end of the month, we had this amount in the bank. That's the story. It's not the three bears with the happy ending. It's a happy ending if this is a positive number. It's not a very interesting story, but it's a story. And that's ultimately what we're trying to do with this spreadsheet, is tell the story of the numbers of the business, not why we're doing it, not how we're doing it, but simply are we making money doing this and not? That's what accounting is here to tell us. Okay, 10 more. Are you going to share this template? No, I am not going to. You can take a screenshot. You can come back and watch the videos. It might take you 3 or 4 tries to get through this, to get everything down in the right order. But I'm doing that on purpose, because if you understand how to build one column of this spreadsheet, then you will understand your business much better. So I'm doing this for your own good. All right. This really needs to be shared. Yeah, I understand. You really want it to be shared. I got that 5 times in the chat window. But every time I've ever shared a template with entrepreneurs, they have not been able to answer the question of why is the value in J20 the value in J20? And that is too important for me to give you the shortcut of a template. With that, I'm going to put that away and ask if there are any other questions.
We have one from Rakia.
Okay.
Yeah, so Luni, maybe another one that we get is, what if I work with my accountant with a template as opposed to me doing it? If you can address that perhaps for the entrepreneurs.
Yeah, again, I had this happen. I went through this lesson with one of my Africa Eats entrepreneurs who is, the derogative term is financially illiterate. She is financially illiterate. She could not answer any question about how her company is doing without asking her accountant for an answer. So I went through this lesson with her, and she did not listen to me. And she went and asked the accountant to go put together a model. And what did he do? First thing he did was download a template from the internet. And we wound up with this incredibly complicated model that I couldn't understand. I spent an hour trying to figure it out. And eventually I said, no, I'm not going to invest in your company because you don't understand your accounting. Your accountant probably doesn't understand this template either. And I can't make heads or tails of whether this is a good idea or not. And so we threw that away, and I got her on a call, and we just built one from scratch together. And now she has a model that she actually understands. And one thing I didn't talk about, once you have this done, when we get to July 1st, you then go back to your spreadsheet. You change the colors in June from blue to green, and you start filling in the actuals, and you can see how well your prediction was. And then you can revise in another version of your spreadsheet the rest of the year. And then when August 1st comes around, you can do July. So if you remember, the questionnaire at the very beginning of the session was, do you have a report that tells you, within days of the end of the month, how you did last month? This is that report. And so that guy who got more money from me than he asked for, he has his spreadsheet where he just fills it out every month. And anytime I want to ask for his financials, he just sends me the latest version with all the actuals in it. And I think he has. I haven't needed from him the future looking version, but I'm sure he has a future looking version of that spreadsheet as well. Somebody says we're still in the R&D phase with no income yet. How does this affect things? Yeah, you build this to predict whether or not your business model can ever make money. So the expectation when no investor is going to invest in a company with no revenues. We'll talk about that in a few weeks. But it's still useful for you as an entrepreneur to have a model that looks out 1 or 2 or 3 years to see whether or not the business model that you think you're building can ever make money. And so you build this model out, everything in blue, and you look at that cash line. And if the cash line can't go positive, then you don't have a viable business plan, and you should go do something else, or you should tweak it, as we say. Matthews has his hand up.
Yes, good evening. I asked the question in the chat box to say, on our side, we use automated a platform which is on track. It is able to generate the financial report, which include expenses. I think all the component of financial report. So I don't know if for example, if we want to submit money to the investor, can we just use the same one, or should we just generate the way we are generating the one?
Okay, so good question. If you're using an online accounting software, it will generate for you income statement, cash flow statement, balance sheet. Historic. It'll look backwards. That's great. If you're out talking to banks, if you're out talking to investors or grantors, and they say, please send me your financial reports, generate them in, and you're already using an accounting software, go ahead, send them those reports. They're also going to ask you what's going to happen in the future. Your accounting software cannot generate a report into the future, right? So there are online templates, there are online tools that will try and produce this for you into the future. They suffer from the same problems as downloading a template, which is they don't match your business exactly. And they're not going to include units and price of units because that's not in the accounting standards. And so they're nice, but not as good as what I just showed you. What I just showed you is honed from 30 years of running companies and 10 years of teaching entrepreneurs. It is the best I've seen in terms of understanding the numbers in a business. So I'm not, if you were trying to apply to me for funding, and I said, give me your historic financials, and you send me those 3 standard reports from your from QuickBooks or Xero or any accounting software, great. I'm not going to say that's bad. But I may just ask you, why did revenues go up? Was it, did number of units go up or did the price go up? That's going to be a pretty common question for me and other investors. And you better be able to answer that question. And your accounting software won't do that because it's not counting units. Yeah, anything else? And I do understand this is not as much fun as selling. Babu, go ahead.
Yes, good evening and thank you for your presentation. My question is about the of CapEx, where it shows seedlings as a cost from where it was, from where it was first bought or first costed. I would like it normally accepted up the value of seedling increases because year on year the seedlings will not remain the same. Thank you.
Okay, you did fade out, but I'm going to generalize your question. One thing about accounting is it's never exactly matching reality. So for example, if you sell a product to a customer today and they pay you on June 2nd, where do you put the revenues? Do you put them in, sorry, they pay you on July 2nd. Do you put the revenues in June? Or do you put the revenues in July? So there's multiple versions of accounting for just revenues. One of them puts it in the month where you made the sale. One of them puts it in the month where you get the cash. I didn't have a line for accounts receivable in anything I showed you. So what I showed you was cash, what they call cash accounting. You put the number for revenues in the month where you get the revenues, where the money shows up in the bank, not where the sale was made. And this opposite is true on the inventories, on things that are investments, especially seedlings. So when do you account for the cost of the seedlings? Do you account for them when you put them in the ground and you spent the money on the pot and the soil and the seed, or do you account for them as a cost of goods for the plant that you sold, which might be a year later? There is no right answer to that. They're both correct. Either one is correct, but one of them tells you how much money you have in the bank right now, and one of them doesn't. And as an early company that's trying to grow, you can't spend anything that isn't in the bank. You can't spend depreciation. None of my spreadsheets are going to include a line called depreciation, but your accountant is. There's going to be a line in those financial reports from those accounting pieces of software that's called depreciation. It's going to look good because it's a positive number, but you can't spend it. It doesn't change the balance in the bank. So I like the fact that we do accounting that's trying to match the month where the cash got moved. And so when I have something like a seedling and I haven't sold that seedling this month, I'm going to sell it in some future month. I'm going to stick seedlings in CapEx. Or I'm going to make a separate section. One of the lovely things about this style of financial modeling is if it doesn't fit into a standard part of accounting, it's not a problem. It's a spreadsheet. You can add another section. So if you want to make a section for seedlings, just to count your seedlings, go ahead, make a section for that, just seedling expenses, separate from CapEx, if you don't want to put it in CapEx. And it's below the other expenses. 1 second on the hands. I do believe that if you're using software, the system can estimate what you're doing in the future. Again, there are online tools that will try and make you a financial model. I've never seen one that is that makes a model that's simpler than what I just showed you, or easier. And I know it doesn't look easy if you've never done it, but you do it. You do it and revise it 10 times. It'll become easier. Okay, Bertine. Bertine, you can come off of mute. Bertine.
Oui, bonsoir, Luni. Bertin.
Good afternoon, Luni. I have a company planting crops, and we also plant trees. I have about 5,000 plants, and I also have a cassava that I have planted, and it will be sold in 1 or 2 months. So now in this case, since on the $5,000 I received, I invested half in a cassava and half in the Imbunga plant. So when I'll do my financial statement, the expenditures for Libunga, that will not be productive that soon because it will take 2 to 3 years. How can I be able to set a balance? Because if I just rely on cassava, I won't be able to have enough profits. So when I introduce that kind of balance sheet, will it not be a problem? Meanwhile, it's just a matter of time for Ibunga to be used to be rentable.
So this is a general challenge in terms of businesses that rely on trees, that you have to put the tree in the ground and wait a long time until it has some value. The reason I'm showing the CapEx the way I'm showing is I think it goes into that section of CapEx, that these trees are a capital expense. You're spending money now to go create something of value later. And yes, if it shows that there's no income or minimal income in the future, again, in 2 weeks, we're going to talk about the realities of funding. And the fact that there are basically no funders that, besides TerraFund, there's no funders that will invest in a company while we're waiting those many years, or almost no companies that will, there's almost no investors that will invest over that long span of time while we're waiting for value to show up. But you still have to account for it. You still have to show what will happen way off in the future. So if it helps, go make the plan that shows 24, 25, 26, 27, and show out to the year where this plant actually starts producing some revenues. That will help both help you understand how long you have to go stretch to get there, and help every outsider understand, okay, we put in this amount of investment in the ground and it will pay off. It's just going to pay off in this future year. Over in the chat window, investors ask if the financial projections are showing EBITDA. EBITDA is just a fancy word for profits before taxes. It's earnings something before taxes. Okay. I haven't pronounced that. Simon. Saimon.
Yes, Luni.
Hi, go ahead.
Thank you. Yeah, my question is about this the financial model. I'm actually using a software, accounting software, but according to the level of my business, I cannot manage to have an accountant. There is any other ways that I can get help to create my template for financial model, because I had one, a ready-made one, but it didn't work. I just put the figures, but I cannot explain. As I said, now I understand why I cannot explain. It's better to create it from the scratch. But I don't have that financial background, and still I cannot manage to employ an accountant or to pay an accountant.
Okay.
What are easy way to make it understandable?
Everybody on this call was taught addition and subtraction in school. That is the only math you need to know to do accounting. Multiplication and division is nice, but you don't actually need them. You just need addition and subtraction. You don't need a piece of software to do accounting. It was done for hundreds of years on paper. It's easier to do it in a spreadsheet. Google gives you a spreadsheet for free. And I did the accounting for many of my startups all by myself. It's been pretty rare when I've had a company early company where I've hired an accountant to do my accounting for me. I do it myself, and I always do my accounting in spreadsheets. And literally, it's just a list of transactions. So all you need to do to fill in that template is you need a list of transactions in your company where you have a date for when the transaction took place, you have a description for what it was, a category that matches something on that financial model, like a category like revenue, or a category like salary, or a category like fuel or utilities or rent. And when I say category, I just use an all caps word like the word rent, R-E-N-T, or for salaries, I use the word people expense. I just call it people. If I pay a lawyer, I call it lawyer, and so forth. Taxes, I call it tax. And then you have a column for how much the transaction was. You can do this in one column. It's a positive number if it was money into the company, and there's a negative number if it's an expense out. Or you can do two columns, one for money in, one for money out. And then you have one more column, which is a running balance for how much money is in the company. So the first transaction you put in this spreadsheet is how much money is in the bank. Today's date, or best to do it for January 1st. January 1st, 2023, description is cash in the bank. There's no category associated with it. Put a positive number in the positive column. The balance should just be that number. Next line, what did you do on January 2nd and January 3rd and 4th and 5th? Here we are, it's June 6th. June 6th, sold 5 units at $1 a unit. $5 came in. Category of sales. And that's called a ledger. Now you have a list of all the transactions in your company from top to bottom. Probably by June, in a normal size company, you have maybe 1,000 lines that are in there, right? Maybe it's a few hundred, maybe it's a few thousand, but it's not hundreds of thousands. It's maybe 1,000 rows in your spreadsheet. And then given that information, once you have that in the system, the balance should show the balance in your bank. If it doesn't, you've either missed something or you've mistyped something. And that is the basis for all your accounting. Because then what you can do is you can go online and ask Google to teach you how to do one formula, which is called SUMIF. And you can make a second tab in the spreadsheet. And on that tab, you can sum up all the transactions that are income. And you can sum up all the items that are cost of goods. And you can sum up all the items that are fuel and rent and people and so forth. And when you make the sum ifs, then you will have an income statement. If you put them in the order that I showed you in that financial model, it'll tell you what your actuals are. And if you, again, read on sum if, you can either sort your spreadsheet by dates, or you can add a little bit of logic in your sum if and have it split it out by month, all by itself. And you can even these days just ask Chat GPT to make you a formula for sum if. It'll probably write that for you these days. Or Google Bard will code it up for you. And now you have an accounting piece of software and you build it in a spreadsheet. And you haven't hired an accountant to do it. And then what you do is on a daily basis, right? However, you're keeping track of your sales and your expenses now, at the end of the day, at the end of every business day, you just go put the items in the spreadsheet. And this is exactly what I do to run my companies. And I run a bunch of companies, not just one. I will literally just log into the bank every day and to the online system. And if there is a transaction that took place in the bank that's listed there, you know, we paid some vendor, we paid them $23 today. I'll go, okay. And I will copy the transaction over into my spreadsheet by putting in today's date, picking the topic that it's relevant to, putting in the description, and putting the number 23, or copying and pasting the amount into the in or out column. And that's it. And then I'll do that every day, every business day, 5 days a week. And so every day I can have an income statement. I can see how my business is doing week by week, month by month, quarter by quarter. And I can do that all within a spreadsheet within seconds, without having to learn some other piece of software, without having to hire an accountant. And by doing it myself, I have a very, very good feel for how the business is doing, because I'm seeing those numbers every day. So that's my answer to, I can't afford an accountant. Great. Awesome. You don't need an accountant. You can do it yourself. It should take you, even if you're selling to 100 customers a day, it should take you, 15 minutes to do that at the end of the day. Okay, we got time for one last question before I hand it back to Amanda. If not, I'll hand it back to Amanda. I hope I freaked everyone out and made you feel like there's a whole world out there that you need to go and learn, which is great, because there's a few hours of lessons online and you'll get good at this.
Well, I definitely think that was a pretty great project, and we're taking your notes that we can rewatch this recording, we can build the spreadsheet ourselves, and I'm thinking if people do it, like you said, one row at a time, they're going to be able to figure it out and build it. Is that what you would suggest to people, just to make it more relaxing, more achievable?
Yeah. So again, go rewatch the video, take screenshots so you can see the whole thing top to bottom, and then build a spreadsheet on your own, one row at a time, that matches your business. And then start filling it in. And again, when you get to revision 10, this will feel like, oh, I get this. This is obvious.
Yes, Rakia?
Yeah, no, I just wanted to say, this is important because the financial model must reflect the activities of the companies, right? And what we find a lot when we start talking to companies, especially in the Francophone region, what we get does not reflect the activities of the company, the true activities of how the company makes money. And so with this session with Luni is really trying to do it yourself, because you understand your company most, right? And if you're able to do that and put it in numbers, then the funding that you need comes easier. If you give us stuff that is generated from software that you don't even understand yourself, you're not going to get funded. So it's painful now, but just know that if you're able to do this part where you really can reflect truly, the activities of your company in a simple spreadsheet like Luni share, and you get better at it as your company grow, then you're already ahead of many companies out there looking for funding. So that's really what I wanted to add, that it might be painful, but it's really you as a founder or co-founder knowing best your company, using this spreadsheet to kind of say, this is how we make money, this is what's going on from the numbers perspective, and it makes the conversation much easier with investors.
Well, I think there's some great comments. I wanted to pass to Samuel to give us a preview maybe for next week and just to say a few words. Samuel?
Thanks. Thanks so much, Amanda. And thanks so much, Luni, for this great presentation. I'm actually going through the comments and I can see folks saying that this is one of the best sessions in the Land Accelerator. Yeah, so thank you so much, Luni. I know it's a handful, it's a mouthful as well. But indeed, it's a very good and fundamental principles, even as we build our businesses to scale. So thank you. This presentation will be available on Mighty Network as well as the recording. Should you want to watch it again, feel free. Feel free also to pass it to your financial expert within your organization for them to be able to appreciate what you have been able to learn. But at least you do have the basic, and what Raki is saying, some of these information are very critical even as we scale. Otherwise, thank you so much, Luni. We look forward to the next session next week. Again, having an amazing session, I believe, around gender mainstreaming. But before that, this Thursday, we have scheduled a session, a peer-to-peer session around non-timber forest product. Majority of those guys in the syllabus, we have been able to hear from them, but we are actually going to bring in an amazing entrepreneur whom you're actually going to like it. So feel free to join us. So we'll be talking more around essential oils. Hopefully we'll be able to get the entrepreneur on board. If not, we'll be able to deep dive around business pitch deck. So we'll be able to have one-on-one review around that. Otherwise, thank you so much, and looking forward to meeting you on Thursday.
Thank you, Samuel. Thank you, Rekia and Luni. And thanks everybody for all your questions. And we're looking forward to having more financially ready businesses. So thank you guys so much.
Thank you for now. Bye.
Bye.
Bye. Thank you very much.
Bye.
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 Bye.